let's take somebody that's going to buy a house and they're the first-time home buyers. They know they're going to have kids 2 or 3 years down the road. They'll opt for a 30-year note because that's what everybody feels comfortable with. And it's not the best product on the market. Trust me, it's not even close to the best product on the market. Where they have a 7/1 ARM, which is a 30-year note locked for 7 years, at generally a much better interest rate. And that's a case where if somebody's not going to be in a house more than 3 or 4 or 5 years, they get transferred. They were transferred into Dallas. They may not want a 30-year product. I can tell you this, that ARM notes, which is going to surprise you, a lot of y'all out there, have been about 25% less expensive than fixed rate notes for the last 15 or 20 years. ARM notes are not something to be scared about. They were bad products when they came out. But when ARM notes came out, interest rates were 16 or 17%. It was a way to get consumers in houses at a lower rate, and they could adjust. They were bad products to begin with. It's like air conditioning in cars. When air conditioning in cars first came out, they were in the shop all the time. Now, are you not going to buy a car because it's new air conditioning and you had trouble 50 years ago? It's something that consumers really ought to look at, because a ARM note is the only truly priced note on the market. And when I say that, a lender's going to tell you, look, we're going to loan you money at 2 1/4 over what it costs us to borrow money. So if they're borrowing money right now, the MTA, like LIBOR, is down to 0.44%. And if they're loaning you money at say 2 1/4 over that, you're under 3%. I've got hundreds of millions of dollars of customers I've closed in the Metroplex that are paying less than 3% half for the last 5 to 6 years. I'm not saying you should get an ARM note. I'm saying you should look at it, but don't be afraid of it.